but definitely continuing to see some strong performance from China. So where we took the money from is that one is from Latin America, that might be more exposed in emerging markets from tariffs, and from Europe. I think on this one, we have been suffering some pain in performance, being underweight Europe. But we see that the pressure there are perhaps more acute, and it's harder to see really legs coming through with activity being still quite weak, coming from a political standpoint that is more challenged.
Fair. You know, we've been discussing the Alibaba impact. I know you can't talk stocks, so I respect that. But what we want to understand, broadly speaking, is obviously, you know, Trump's directive over the weekend was about limiting Chinese spending on critical sectors in the U.S. And many are saying that, oh, this was part of that playing out in the markets, with also Alibaba announcing its capex plans, also the stock being overbought or maybe extending its gains, having very hefty gains year to date. How do you look at the whole tech supremacy story between these two regions? You know, U.S. tech versus Chinese tech.
I think both of them. We have to go into some company names because in a way.
If you're okay, then that's fine. I
so
don't know if
the fact is that Alibaba is one of the cheapest tech stock in the world. So despite some of the recent performance, so you still have some legs for Alibaba to materialize and to basically follow what happened in the Max 7 a couple of years back. This could happen in China with more investment. So from our analysts and bottom-up research, we hear that the tone is quite okay for tech sector in Asia, including Korea, China, and Taiwan, where they see the second half could be quite promising in terms of spending there. From a U.S. perspective, you have a reshaping of what is required in terms of investments. So the likes of NVIDIA, for example, is a primary target of lower capex. But you still see Microsoft saying that they will do 80 billion of capex, while they did 20 billion in the last quarter. So they are staying at the same rate of capex, not expanding as much as they used to do. So I think for us, that means that the AI story is still there. There is a bit of reshaping who will be the winner and losers, but you don't want to exit not the US, not China, because it's broadening more in terms of opportunity set.
Well put, yeah.
Yeah, interesting. Where does that leave the whole US exceptionalism narrative?
So we have been on that camp for quite some time, and I would say that starting of the year, we were also there. What has been posing me for now is the revision of earnings, especially on mid-cap, where you see revision going lower. So earnings are still being strong in the Q1, so that has been supporting the markets. But basically, the US was priced for perfection. And the downside that we see in economic data can be a risk to that earning story. On the other hand, you have other markets that are starting from a lower valuation base, and that gives them more upside. So having said that, from an earnings story, you still have better growth in the US, and that's why I still want to have some exposure to that market, and giving some money as well to China in particular, where you see the potential for low valuation and earning growth supporting the market.